Alrighty, guys, it is 3:30 this Wednesday, June 18th, and we are looking at the market, which is pretty freaking spectacular, right? All over the place. I mean, this is the Fed announcement. So they came out, Fed announcement came out, they didn't change the interest rate. And they're very, very much expected, I guess. But the funny thing, funny or concerning, or however you want to put it, is that the Fed's forecast was absolutely contrary to everyone else's forecast in terms of what they're expecting doing the big beautiful bill, the regulatory deregulation stuff. All the stuff they're doing is they're expecting a growth rate in the 3% range. And these guys are expecting just the opposite, slowing down, stagflation kind of stuff, and doom and gloom and inflation rising and all the above. So that is where the Fed is at. I'm just shaking my head and thinking like, okay. So the market reacted to that, and they not much reaction on the news announcement. But after you start talking and explaining, it's like it's just been volatile, not directional, kind of what we thought was going to happen. And at this point, you just kind of have to leave that and see how this whole thing is going to shake out, kind of where we are. So I would yes, start off. It depends on when they end up closing. If this dynamic here, I did take one more trade on the ES. You saw that one there, and I was looking for the trade up here, the short one, a short trade, but I missed that one. Happened too fast. And the whole thing here is when you see this directional, non-directional, volatile, non-directional kind of stuff happening, what you have going for you is really that it's that they're going to probably run the edges. We'll try to run it up and down, and one or twice or more. And it's exactly what happened. I've seen this a few times. That's why I was looking for the fake out trade. The go with type of trade here, I caught in that one quite a few times. And that just is not pretty. You buy on the way up and you get run over. Then you sell on the way down and you get run over. That's just go with type trading. And that it just doesn't work when the reaction is volatile but not directional. You should not trade it like that. It's just don't. What you were looking for is really a run up here, maybe run a high. It's hard to find where the stop runs, where the run ends, I should say. Same thing on the way down here, and it's hard to know when the stop runs because this one ran it quite a bit lower than you would expect, and that was pretty ugly. But that's kind of how that ended up. So pretty rough stuff going on there, I have to say. And I would say that we are right now range bound going into the overnight. Depends on if they start taking out that low, the 6,025s, I would be on a short side. Above that edge at the 70s, I would be on a long side. So that's kind of the way I'm looking at it. And I'm thinking that it could be very much a directional move, but not today. Probably going to see something on Friday. Now remember, tomorrow is Juneteenth. Market's going to be a half a trading day tomorrow. So we'll see as people digest this when you have overnights trading and so on and so forth. We're going to see more of an action dynamic kick in here going into on Friday's trading. But I would say that we are right now starting off range bound, and let's see how the fallout kicks in. But it is, I mean, feels pretty darn political. The Fed is forecasting just the opposite of what the administration is forecasting, and that's just someone is going to be right and someone is going to be wrong. You know what I mean? It's probably no. It's probably going to be, I doubt it's going to be like somewhere in between. Either you think that the policy is going to create growth and opportunity, or you think there's going to be the tariffs is going to drag us down into inflation and all sorts of stuff. So that's where we are. So the Fed is just assuming tariffs are going to run up inflation and it's going to slow the economy and all that stuff. And we'll just have to see who's right. So that's where we are. So starting off range bound, looking to buy weakness. Watch the lower edge if they trade below 25s. Close below it, I would be on the short side. If they close above the 70s, I would be on the long side. So that's kind of the dynamic. And remember, tomorrow I'm not going to open the trading room tomorrow. It's going to be one of those short half days. Not expecting a whole lot of action, so not going to be sitting through doing the analysis that morning. Back on Friday though, so we're doing it on Friday. It's a regular day trading day on Friday. Looking at the NASDAQ and the bonds. Let me see here now. Oops, where am I? There, NASDAQ and the bonds. And at this point, it feels very much like, let me see here. It feels very much like the bond market is just sideways. It pulled back a little bit, so not crazy amount of stuff going on there. But it's look at that thing go. Anyway, so at this point, it looks very much like we have a little bit of drift to the downside on this, and we'll see how far they can take it on the downside. But that's kind of what it looks like right now. So bond market range band going into the overnight. We'll see where they end up closing, but at this point, I would not look at any directional moves on that guy. That's where we are on the bond market. Uh, Looking at the Nasdaq, and also that guy is also volatile, very volatile, back and forth in a big way. So a lot of stuff happening on that guy. So not sure exactly where they're going to end up, but they're right back to the midpoint here. So if they close below that edge at the 880s, I would be on the short side, and above the 22,070s, I would be on the long side of this. So that's the way I'm looking at the Nasdaq. So same as the ES, and I'm just waiting for maybe the fallout coming in from next week, or next week, from Friday. That's where we're probably going to see a reaction to this trading and see if there's going to be any sort of directional move in the market based on what Powell said. And it's not going to be tomorrow because it's probably going to be a short day and not much happening. So we'll see how the whole thing shakes out on that one. So range bound going into the overnight right now on the ES and Nasdaq. Looking at oil and gold. At this point, I would say that we are pretty much in a spot where, let me hang on, oil and gold, there we are, those guys. So pretty much in a spot where we start off range bound on both of them. The big reaction on gold on this point. You can see here the gold on the news is sold off pretty good. They did take out that low at the 33.90s briefly. They're back reverse retesting it now. So I would just be looking at gold as a range band market right now. If this hold below this, if they close below 90s, I would be probably on the short side of this if they can retest these lows. And if they close above the 15s, 34 15s, I would be on the long side, see if they can take it higher. Maybe even up to the 22s, but right now it's 15, 16s. So starting off range bound, looking for shorts against that 15 and the 22s, looking to buy against that lower area 92 if they close above it. If they can't get up above it before they close, we're going to be on the short side of this. But that's where we are on this guy. And then oil back and forth to go. That reaction, I thought there was something happening on that, but it's we'll see. I thought something happened in the Middle East because that was an interesting reaction right here at the 312. So not any news or anything like something came out there. But you see, this is the reason I'm not trading oil because this is not the Fed reaction on oil. This is just something else happening, and you can see how crazy that got. So if you're in a trade here, say you've been sitting in a long trade all the way up here and getting all happy, and then it run right down here and shake you out and then some. So frustrating stuff. But so oil range bound, gold range bound right now. Oil around that 72, 73s. And remember, we roll to the August expiration on oil, and gold just stay range bound. Watch that level, the 30, 33.90s. If they can't close above it, we are on the short side of this. All right, so back to the ES, and we're looking at a market which is range bound. So it hasn't moved, but this volatility is super hard to trade. So I took one trade on the ES that was on the way back up here. I forgot to talk about it, but it's on the way down here, and I didn't want to be super aggressive on the lower end of this, but it looks to me like they were actually starting to retrace quite a bit. So I hopped on a long trade. And it ran up. I thought I had a great trade going here for a bit. Moved my stop up a little bit. Then they ran down, knocked me out. Reverse, 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 reverse. Oh, I had to reverse that thing. And then this is the move I was waiting for. A little pop here up to that tablet or the midpoint. And of course, it had to squeeze, 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 squeeze. So if you got long on the lower end, they kind of squeezed you out out of that thing. And then yes, it ran right up again. So, but this dynamic, and if you want to trade the Fed announcement. And you have two options on it, and it's going to be directional, but not rain. It's going to be directional, or it's going to be volatile, but not directional. And if it starts like this, volatile but not directional, then when it starts swinging after the announcement, if it does, look to fade those back to the mean. And that's if you did that, you would have at least two great trades going. You had to just be very nimble about the edge. So I mean, had to be prepared to put a little bit bigger stop in there. And you're looking for a run up here to the prior rotation, initial balance high, maybe a little bit higher, and a failure. So you have to watch the bid-ask chart as well when you start approaching the edge to see what's happening. And then on the lower edge, same story there. They knocked it down pretty hard. So on the way down here, if you try to get long here in that rotation, you had to have a huge stop at the initial balance low. You still had to fade a ton of heat, and they took it quite a bit lower. So that was a little bit lower than I thought it would go, but. Again, you can wait for it to start failing and then try the trade afterwards. So I have 15 bucks on that one contract, and I have 36 bucks on 3 trades on the Nasdaq. So that's the net result on the that's the net result. And you can see, I mean, you have, if you haven't seen it, you have on the account manager, if you haven't done that, you can select your live account and you can see what the total P&L is for the day, 51 right now. The total balance on that account is 2,300 bucks. That's what I trade the small amounts. So then you can that's what you can keep the account manager in 851 and later. You can keep that account manager open and just watch this thing build throughout the day. That's if you didn't know that. All right, so that's where we are. So we'll wrap it there for now, and I'll see you guys back on Friday. Tomorrow is closed, half a day. If you want to trade it, it closes early. Then won't expect too much action going on there. So I'll see you back on Friday, guys. You have a good evening. All right, guys, later.